Okay. Let's take a look at today. I was gonna try to get into the market, but I knew this was gonna be a problem right now. And our problem is this. The market's problem, I should say, is Mr. Draghi. Um, yeah, not too much we can do with this. The issue is that um, my experience with Mr. Draghi is especially right now the question and answer session, and he can go in a lot of different places with his comments. And given the auction yesterday, actually given the auction over the last 2 days, my my expectation is that this market has been kind of waiting to see what he specifically is going to do. And as long as he is speaking, it's kind of like Yellen. As long as he is speaking, there is potential for um, volatility in the market. And that starts to get to some things that we're going to talk about today, like news, etc. So with that, I'm going to go through the market profile analysis. Should I look at the market every morning? Yep, exactly. I'm going to go through that today. So let's get started and get into the day. Our agenda for today is we're not going to spend a whole lot of time, but we're going to spend a little bit of time reviewing the homework from last night, how to complete the daily homework spreadsheet, how to look at building a trade plan, how do we incorporate news, and then trade execution and management. We're going to talk a little bit about trade psychology, just what I believe to be relevant, and then we're going to talk briefly about day 4 homework. So when we think about just a few questions from the homework, days 1 and 2 were certainly a significant amount of information. And I know it came fast, and I know that there was a lot, and there's probably still some concepts that people are trying to apply. Um, the important thing for me, and I'm going to sum up the last 3 days in this, is as we go through the market examples, and I'm looking for trade opportunities, and I'm talking to you about trade opportunities. Uh, what's important right now is that maybe you don't immediately get, and probably not to the same conclusions I do, but as I explain them, and over the next 2 days, as I explain, this is what I'm looking for, this is what I'm doing, here are my current if-then scenarios. We're going to talk through why those are important today. Here are my current if-then scenarios, and as I get into a trade, why I'm managing that trade, what I see in the print. As I'm talking through the scenarios and um, my read of the context of the market and what I'm looking to trade, what's important uh, is that you kind of get it. You go, oh yeah, okay, oh that's right. So things are brought back from the last 2-3 days that are in there because we've gone through them. But the kind of indication over the next 2 days here that you've got it, you're getting it, it's there in your mind. The next step is to do the repetition, to go through it and go through it. And I think what I will do next week is, and I haven't talked to DB about this yet, so hopefully he's okay with this. You can chime in, DB, is to try to get some pre and post market editorial videos out there relative to what I'm looking at in the morning for the day, and in the evening after the day has passed, what were the opportunities? How did the absolutely not. How did the day set up? How does it play into the next day? What are some of the key elements of the day? I kind of give you my narrative of the day and what I'm looking at for the next day's trading. What I want to do is kind of give you some input and keep getting to those areas in your brain that recalls the concepts, the elements and the attributes of the volume profile to say, okay, yeah, if we're getting acceptance here and the market tried to test here, we got this kind of reaction, then this really means this based on the overall rotations. This is where we are. So if the market's going to auction normally, then we should start to say either this or that. So that's the kind of video I want to provide next week so that it'll help trigger some of those things that uh, you're learning and have learned this week. So that's kind of the gist. The homework is really there to get you to start thinking about days 1 and 2 and how you trade. There were a few things in there relative to how you trade. What can you see in the order flow in the print? And then the day 3 homework really is to take that a little bit further, lean on the auction fundamentals, the fundamentals and elements and attributes of the volume profile, because what you want to try to get to, and this just comes with practice, is when you start to see a new distribution of price being created in the profile and you start to see volume in the profile, the profile is starting to grow. Depending upon where VPOC is, I want you to get to the point of automatically saying, okay, well, we've got a small distribution. VPOC is near the top. We got to finish near the top. Automatically, that should trigger in your mind, this auction could be over in this direction. I want to start watching the print to confirm that, and my next trade is here. And that's really what the homework from last night is for. To help you have a framework to start writing some of this down. And my experience is as people write things down, it becomes more their own, and meaning that they take ownership of it. And it's something that is more cemented, and they're in their mental reference and easier to recall and actually use. So that's really what the homework is for. And I guess I don't expect that everybody here had gone through it. I would tell you that the homework that was for last night is something you can take next week and do several times next week. It wasn't just good for day 3 of the course. So last thing I'll say about it is keep that document handy. Reference it over the weekend because it's going to help jog your memory, get you looking at a few things. Keep it handy, reference it several times. I would not recommend that you just keep pouring through it day in, day out. Give yourself some time to write down some notes, step away from it, look at the market, come back, look at what you wrote, see if what you wrote before is true, still remains true, or if there's anything you can add to it or change to it. That's one of the ways that you will continue to learn. So I don't want to spend a whole lot of time on homework because I want to get through the planning and homework sessions. Question, any thoughts about the VPOC for Tuesday and Wednesday the same? Yes, and we're going to get into that today. Very good question. I can tell you that it's already in the it's already baked into what we're doing this morning. So let's talk about doing homework. And I've said this twice already. Not that I've got a chart here that I'm counting how many times I've said it, but I've said it twice. I'm going to say it again. And this is really important. The only difference between those who are successful in trading and those who are not successful is that those who are successful in trading are willing to do the things that those who are not successful are not willing to do. So I know from my own experience, I know from my experience as a trainer and talking to a lot of different traders that there's this expectation that, and I believe it's justified based on a lot of the marketing that's out there. I mean, I bit on a lot of marketing that's out there. Um, I think there's this expectation that there is a system, a method, an indicator, maybe even a black box out there that is the answer in trading, and that all it takes is finding the right one and the right indicator, and you can make a lot of money in trading. Um, I understand it. Again, I get it. However, my experience over the years, and after blowing up accounts, I blew up 4 or 5 accounts. I spent probably close to 40 grand on training when I first started in the business. My experience is that uh, the only way of becoming successful is taking the tools like we have here with OFA and doing the work. And uh, it may mean that it takes you 2 weeks, 3 weeks, 2 months, 3 months, depending upon your schedule and your time. But the only way of making this a long-term successful proposition is by doing the work. And a big piece of it every night is homework. And the objective of homework is to identify context of the current trading environment and whatever instrument you're trading, and the positions and convictions of the buyers and sellers. Because again, it's buyers and sellers that move price, active buyers and sellers. So you want to understand the current context of the context of the current trading environment and what their positions and convictions are. That's the objective of the homework, to gain context. You've heard in real estate, somebody know what the 3 most important things in real estate are? Location, location, location. Exactly. Well, I will tell you that in the same vein, the most important thing in trading is context. I would say context, context, context. There is nothing that will help you drive your trading decisions more than doing the work to understand the current context of the market. And that's what we're going to go through today. How to gain that context, how to look at the market, do the right research to say, here's the current context of the market. So as I approach the market and I'm looking for trade opportunities, because honestly, I don't know today if the market's going to stretch higher. I don't know if it's going to stretch lower. I could go out on CNBC and other sites and I can read all kinds of articles where people are saying it's going higher, it's going lower, all kinds of articles, and they might make some good cases based on some technical indicators and what have you, but I know that none of it matters. And I know that none of them know what is going to happen today. So relative to the context, as I look at the market and I do my work, I can say, all right, this would make sense as the market is auctioning. I can see today where it gained acceptance. I can see where it tested. I can see where it was successful in auctioning. I can see where it failed. That is a reference point. Now let's take a look at that in the overall context of the larger swings and see where we're at. And now I can start building a plan. When I have that, I can make some solid decisions. I can maintain my patience, my composure, and my um, uh, objectivity as I'm trading. The other objective of the homework is to identify higher probability trade locations and scenarios for the next day trading, which will make up a daily trading plan. I can't tell you me, myself, and how many traders that I've talked to, run into, had conversations with, where they will come into the market, let's say the ES, at about quarter past the hour, 9 o'clock Eastern, and maybe later, and they get their indicators ready and their charts ready, and all they're doing is looking for an arrow to pop up, or price to cross over this line, or for these three charts to show some level of confluence in something. And they have no desire to understand the context, nor do they have time to understand the context. So building the next day's trading plan, so that was the objective of the homework. There are two components we're going to go through. The homework to get the context. Now that I have the context, I want to build my trading plan. What am I expecting this market to do? What am I expecting buyers to do if they start auctioning higher and if they start auctioning lower? What are my expectations based on this market? What are the buyers and sellers currently telling me? So the objective is to determine those areas where good risk-reward trades are likely to occur so that we can achieve our daily profit goals. And we accomplish it by using historic and dynamic, meaning current, market-generated information to identify entry and target areas. Now, what I would tell you is, I would tell you that it really doesn't matter what system you're using. This is something that every trader should be doing in order to create a consistently successful trading business. So one of the things that we're going to go through, and you're going to hear me talk about, not just in a specific statement, but as I'm actually looking at the market, the very first thing I talk to is if. You will always, well, sometimes I say should, and when I say should, I typically correct myself, because there's nothing that buyers and sellers should do. There's only what they do. And if that sounds a little bit like Yoda, then so be it. But I want you to think about this. When I start looking at the market and I start thinking about the market and looking at the market as a series of if-then scenarios, what it allows me to do is it allows my mind to allow for price to go higher and price to go lower. If I start the day with some kind of bias because I've read something or I've interpreted something that says, oh, this market's going up. Now, there may be reason to think that that it's more likely for price to go up than down based on what you're seeing in the auction. But by using if-then statements, and this is why I use them, this is the power of them, by using if-then statements, it keeps you open to whatever the market's going to do. So as I'm reading the auction, what you'll hear me say, and you probably heard me say it yesterday, if this is true, then this is what I would expect. So if this is a move, and we've just broken through a low volume area, then I'm going to expect a move back down and a test back down to this low volume area. And if that happens, then I will look to get long if these conditions apply. So keeping the if-then statements out in front of me allows me to reduce, I won't say eliminate bias, but reduce my bias and help me focus on what's happening actually in the market, listening to market-generated information that the buyers and sellers are giving me. So the very first if-then statement is, where are we opening relative to, or where might we open relative to today's or the previous day's activity? Tells you a lot about the overnight. If the market opens out of range from the previous day, that tells you something happened in the overnight to cause the market to go higher. And what you're looking for is to say, okay, we're out of our range from yesterday. Is this cash market, the RTH session, going to accept this, or are they going to reject it? And it could just go up from here. It could go down and test. It could go up and test and move back down. What are the conditions that I would look for to start supporting any one of those. So where is the open? That's my first if then. So if it opens up within the previous day's value range, the total range for the day, maybe we can use the extremes of the value range or the extremes of the day as our first reference point. So for example, if price opens up outside of yesterday's complete range, then without question, one of our first reference points is the previous day's range. And we're looking at the open type. Like yesterday, we had an open drive. We had one tick to the downside from the open and an immediate and strong move to the upside, called an open drive. If, and this is just as an example, if you have a market that's opening up out of range to the upside, out of the previous day's range, and you get an open drive, that's a strong sentiment that the current RTH session is not only accepting price higher, but they're rejecting, and this is the other key piece, they're rejecting previous day's activity, which means you're likely to see price continue to move higher in that day. And so you start building your reference points relative to, and for if it were me, I'd build reference points relative to what makes sense in terms of a pullback or a test lower before I would take a long. And my target would be, I would look at my volume profile and say, if we're here and we're starting to build volume higher, then my expectation is this high volume and possibly the low volume area above it as a test. So I would find my entry, if then, so if price pulls back to this and the print looks like this, then I'm going to enter, and here's my stop. I'm going to put my first scale here in front of this high volume area, and my second scale up to, depending upon what happens at the high volume area, my second scale will be up at the low volume area above that. So I start building these if-then scenarios because, for example, let's say we get that open out of range, and we get an open drive. The other thing I have to keep in my mind is there anything above, like a previous swing high, that may, where sellers got real active, that may cause some issue for a long today? And if that's a 1.5 away or 2 points away from where my entry might be, given the risk reward, I may want to reconsider or just sit on my hands until it proves to get through that area, or there's evidence of it struggling in that area, etc. There is no try. I like that. Hopefully that's the last thing that sounds like Yoda. If price opens outside of the previous day's value range, are you above the value range? Are you below the value range? And that's the same thing for the day's range as well. Excuse my voice seemed to be a little dry. I'm going to grab a quick drink of water and see if that will help. Okay, so I want you to understand this example of the value range. I don't want you to focus on value ranges. Value is just an opportunity. It could be closing swing high, closing swing low. It could be low volume area from the previous day's profile. So for example, if there was a low volume area from the previous day, and we had, I think, 1910.75, 1910.50 yesterday morning, that acted, it wasn't just a low volume area, it acted as an unfair low, excuse me, when price came back down to it, then that may be a reference point. So as part of our homework is identifying all the potential reference points that we would want to put into a trading plan. So value range, please don't lock in on that. It's just an example of a reference point that we might use. So the second if-then, if price moves up or down. So our first if-then is, where is price opening? And I'm going to give you a quick example right now. So yesterday, pull this over. Yesterday, the top of our range was 23.50. Right now, less than 3 minutes to the open, price is at the top of yesterday's range. Right now we have a finish in the overnight to the upside, but you can see a lot of pressure to the upside as well. As price has been auctioning lower, as it's pulled back, as Draghi has been speaking, I can see that we've had what I would call in these bars a relatively successive neutral auctions. And as price has been moving up at the top of each one of these bars, not a lot of VCAs that support this move up. So at the top of each one of these bars, I can see activity coming in at the bid as volume is coming into the market, but price is still moving higher. So on the way down, neutral auctions. On the way up, we can certainly see some selling, but price is continuing to move higher. So without creating a bias, what this is telling me is that we have buyers who are not only active, but very interested in moving price higher. And there's the potential that price will, yesterday's price range will not be accepted. So I'm looking at where we might open here, and we're opening, we'll see where we open, just inside of yesterday's range right now. So if this were to test lower, looking for a potential long, what I would expect, just like we had right here, is a potential test. Look at it, came right down to VPOC. Remember what we've talked about the last couple of days? If price comes back down to VPOC and really cannot, the one side can't get it through VPOC, that puts this level up here at risk. So I have to expect that there may be a test lower. And I have to expect that possibly price will come all the way back down to yesterday's VPOC. But if we get through 25, we already are through 23.50. If we have an open auction, and we're just about to open, and we can see volume growing now, I may look for an initial long off the open, depending upon what the print does. Because everything right now in the pre-market is pointing towards higher prices. So if we get a pullback in the morning, because we're opening up in range, we're opening up in yesterday's range, which is over here, and there's our open. We're opening up in yesterday's range. Where might this test back to? And certainly back to VPOC, and possibly back down to this low volume area down at 13. What we're going to go through is, what if price moves up or down, and then how to use our longer term composite to identify our other levels. And this is what the homework template is for, so that we have additional framework for our trade. So price is opening around 24. Where did it open? Hang on. Just give you this example. It's just a lot of volume right now. My system is trying to draw a lot of charts and it's acting a little slow. All right, our open was just a couple of ticks, actually one tick above yesterday's range at 23.75. Let me find my 2500 chart and I'll bring that over. A second.